welcome back to the channel. Today we'll be working on a journey with Nestle Nigeria. Nestle Nigeria PLC is actually a very renowned organization in Nigeria that deals with food and beverages, and today we will be looking at the cash flow of this prestigious company. So in case you do not know, for the records, Nestle Nigeria is actually the producer of Nestle Milo. They produce Golden Morn, they produce Maggi, the seasoning, and so many other products like that. So today we'll be venturing into the cash flow analysis for Nestle for the year 2023. But real quick, before we step into this chart that is on the screen, let's quickly take a peek at the data sets that produced this chart. So taking a look at this, we have 6 attributes. We have 6 attributes, which are the summaries. They're actually summaries from the financial statements of Nestle Nigeria. So here we have the starting cash. They started the year with an amount of 117.9 billion. Their operating cash flow was 82.7 billion. The cash flow from investing activities was minus 55 million. That means they invested 55 million. Then the cash flow from financing cash flows also was 21.2 billion. The overall net change in cash was 48 billion, and the ending cash was 168 billion. So these are the figures that this chart is explaining in a visual manner. We'll take a look at the financial statement of this company too, because this is just a summarized data. If we take a look at the financial statement of this company, we will see much more. We'll see that it was actually summarized. Now, if we walk down, this is net cash from operating activities. So we see that this is actually a summary from other factors, increasing long-term debt and all those stuff, income tax paid, other long-term employee. So this is a summary of all the operating activities, and then we have cash flows from investing activities. This is the summary. And so if we go down, we'll also see, if we check down here, we will see the cash and cash equivalents. So the ending cash, we see that is 167.8 billion. We see the cash equivalents at January 1st, which is the starting cash, 117.9 billion, and the net increase in cash and cash equivalents to be 48.8 billion. So these are all what the charts will be reflecting, the summary of all this. So we took the summary of all this and came up with that beautiful chart. So let's walk back to the chart and take a glance. So before we move further, the green bars are representing cash inflows, while the red bars are representing cash outflows, and lastly the gray bars are representing the total cash. So this total starting cash and the total ending cash. If let's look back, let's take a step back into the financial statement. So if we check the ending cash, the starting cash for January 1st here, which is the starting cash, which is 117.9 billion, we will observe that it was the ending cash for 2022. So this is 2022 and this is 2023. We'll see that the starting cash here was the ending cash for 2022. Now obviously this ending cash for 2023 will be the starting cash for 2024. So I just thought that we should see that. So let's go back to our chart. Now, like I explained, the green bars are saying, okay, these are inflows, and the red bars are saying these are outflows. Then the gray bars are actually talking about the total. So we could see the starting cash here, like it was reflected in the financial statement, to be 117.9 billion, and the ending cash to be 167.8 billion. And here is the net change in overall cash. So now the cash flow actually has different categories. So we have the cash flow from operating activities, we have cash flow from investing activities, and cash flow from financing activities. So in some materials you see this represented as CFO, CFI, and CFF. So CFO is cash flow from operating activities, CFI is cash flow from investing activities, and then CFF is cash flow from financing activities. So of all these three, the most important is the operating activities. So before we dive further, I'd like to give a clear definition of what cash flow actually is. So cash flow talks about how well a company is able to generate cash from their operations. So how they are able to generate cash from the selling of their products or the rendering of their services to clients or customers, in this case products. It also gives a quick glance into financial performance of the company, and it is actually a good place to look at when you are researching for investment ideas. So the cash flow statement is actually where you look to see if the company is actually making money or not. Now, like I mentioned before, I said the cash flow from investing activity, from operating activity, is the most important. So we have the value here to be 82 billion. We have the value here to be 82.7 billion naira, and so this actually shows us how much the company made from the operations, and it actually includes cash received from sales. After salaries to employees has been accounted for, after interest has been paid, debt has been paid, and then tax has been paid. So, and an increasing CFO signifies growth, and a decreasing CFO signifies a decline in the company. So on the other hand too, a negative CFO says that the company is losing money and they might be out of the market in no time. Also, a positive CFO is saying that this company are doing well and they are actually here to stay. So moving to investing cash flow. Investing cash flow here is actually showing a red bar, means that money has gone out. Now, this red bar and this negative number here is not saying they actually lost money. No, it's actually saying that they invested money. So for example, maybe they bought another company over, maybe they acquired a company, maybe they bought property, plants and equipment. So it could be that they bought other company share. It could be that, just investment. So this actually involves purchase or sales of long assets such as property, plants and equipment, like I mentioned before. Now, most times it is actually covering the money that is spent to build the business, to grow the business, in acquiring another company or purchasing assets, properties. So the cash flow here most times it appears negative because the company is investing money into its growth and maintaining itself. So in some cases it can actually become positive, but that's actually on a rare occasion. So for here we see that Nestle invested 55.1 billion naira in 2023. So that's actually what that is saying. And also this investing activity also involves when they pay dividends to those who invest in the company. So real quick, let's move on to the financing cash flow. So the financing cash flow is actually talking about how this company raised their money. How did they get the money they use in running this business? How do they get the money they run a business? Is it loan? Is it the shareholders equity? So this is where it actually shows. So the cash flow for financing activities is where you find the amount of money the company has raised. Where you find the amount of money the company has raised to their share issuance, their bond issuance, or other funds. Could be from debts, they're borrowing money. So all the money that they receive over time actually shows up in this part, and it also includes dividend that they received from prior investment that they've made in the previous year or maybe 2 to 3 years ago. Also share buyback. So a positive CFF actually means that the company is raising money, and a negative CFF means that the company is paying money out. So that's that. And then the net change in cash, we now have net change in cash, which appeared to be 48.8 billion naira. So this is, to get this one, we add all the categories of the financial cash flow together, of the cash flow statement together, which is the okay, the screen is moving now, so let's get the balance back. Okay, so when we add the operating cash flow to the investing cash flow and then to the financing cash flows, we'll get the net change in cash, and then this directs us straight to the ending cash. So if we observe Nestle very well, we will see that they have actually made a significant growth and increase in the period of 1 year. So we see that they started with 117.9 billion naira, but they are ending the year with 167.8 billion naira. So that's an increase of about 50 billion naira, and that's actually a good thing for this company, Nestle Nigeria. So if you are, next time when you are looking out to a company to invest in a particular company, maybe to buy their shares or buy their bonds, make sure to look at the cash flow statements. Now, something to take note of: if the operating cash flow is greater than or equal to their net income, the company is said to have a high earning quality. They are said to have a high earning quality. So these are the things that investors need to look at for. So if you are looking to invest in a particular company, maybe Nestle or any other company, you take a very good look at the cash flow statement and observe the operating cash flows and observe the financial cash flow and the investing cash flow. See how well these people are doing, see their starting cash and their ending cash over time. Because if we observe the starting cash for Nestle, we'll see that the previous year was actually lower, so they did way better. They did way better in this year. The previous year they were actually running on a loss, but here they've actually recovered. If we check the financial, their financial statement, and we observe what it was for the last year, we'll see that the operating cash flow for last year was minus 4.4 billion. So we see there has been a very significant increase in just 1 year. So these are important places to look at when you want to invest in a particular company. So that will be all for that. So I recap that when you want to look at the earning quality or capacity of a company, you can compare. Now in this regard, you can compare the operating cash flow amount to the net income. If it is equal to or greater than, that means they have a high earning quality. If it is lower than, then that's otherwise you just know that they are not they do not have a high earning quality, and it's not so much of a good organization to invest in. So that will be all for this video. Thank you so much for joining. I'm glad that you watched this video to the end. Please do well to like and drop a comment, whatever it is that's on the chart that you think I didn't mention, or you have a different point of view or opinion, please kindly drop it in the comment section. And lastly, do not forget to subscribe to this channel. Thank you so much. I hope to see you in my next video. Bye bye.